What's going on, everybody, and welcome back to InvestQ. Earlier this morning, Castellum CTM, for the first time ever in company history, just had their first earnings call. And I was there and I listened to the entire thing. And I took notes and I listened in also to the Q&A section of the call. And I wanted to give you guys my thoughts. Overall, well, real quick, I know this is going to be very controversial. While the price action alone is not very good right now because a lot of people are upset, and a lot of people are upset with the earnings report, not the call, but the earnings report that came out yesterday after hours. A lot of people are upset when it comes to those two things. When it came to the earnings call, I actually did like the call. Now, being very clear, not everything was perfect by any stretch of the imagination. There are absolutely still things that I want to see improve, and things particularly that I'm talking about is when it comes to the speed at which the massive backlog is going to actually begin converting into meaningful revenue, profitability, and also eventually seeing Castellum complete an accretive acquisition. But I do think that the earnings call gives us significantly more context than simply looking at the Q2 headlines that came out yesterday. And there also were a few things that management said that I think is particularly important for the long-term strategy for the company. So what I want to do today with all of you is break down exactly what it is that was mentioned in the earnings call, how that reflects what was reported yesterday on the Q2 earning report, and also how that gives us some insight to the future, the long-term strategy and the long-term future for Castellum CTM. And quick disclaimer, as always, none of this is financial advice, and I'm simply sharing my own research and opinions. So first off, let's get this part out of the way, and I don't want to sugarcoat anything at all, because again, I am not biased. I like to look at the bull case scenario, bear case scenario, and I like to look at the pros and cons and the good news and the bad news when it comes to any stocks that we cover. If you only look at the Q2 report by itself, this most definitely was not a monster quarter because revenue came in at approximately $13.9 million, which is stable. Again, as they do say, it is stable compared to the last year's quarter of $14 million in Q2 of 2025. Gross profit did decline from roughly $5.1 million to $4.7 million. And adjusted EBITDA went from approximately $500,000 in Q2 of 2025 to basically break even in Q2 of 2026. So if you're just looking at the numbers alone from the Q2 report, the thing that a lot of people are going to be saying, and what a lot of people are actually thinking right now, is they're disappointed. That's what the overall sentiment is when it comes to this quarter. And if I was to, in my opinion, come up with a question they would ask is, why would they want to be excited about this quarter at all? Now, again, I do understand the argument that people on that side of the fence have, but I think that Q2 by itself misses some of what is happening underneath the surface, because if you zoom out to the entire first half, again, revenue increased to approximately $25.7 million, or it increased from $25.7 million last year to $28.2 million this year for the first half, which is an increase of about 10%. And gross profit was also slightly higher at approximately $9.8 million versus $9.6 million as well. And management continues to expect to have a record quarter, or not record quarter, a record year when it comes to revenue for fiscal year 2026. And to be clear, if they just remain flat for the rest of the year, they're still going to complete that goal that they have, what management continues to say about having a record year when it comes to the revenue. Now, will they remain flat for Q3 and Q4? I'm not sure, but I'm just saying that even if they remain flat, it's very easy for them to get that record revenue for the fiscal year of 2026. Now, one of the biggest questions after seeing the initial report was whether the Q2 number represented deterioration for the business or simply timing within these government contracts. And when we listen, or when I listen to the call and I go over all the things we're going to mention, it does appear that it's more of a timing factor when it comes to the government contracts rather than actually seeing deterioration within the underlying business. So management explained pretty well. What they explained pretty well was regarding the decline in adjusted EBITDA, because for the first 6 months of 2026, adjusted EBITDA was approximately $400,000 compared to the $600,000 in the first 6 months of 2025. But management described this as being influenced by planned front-loaded investments. So what this means is that they're investing in things such as business development, investor relations, acquisitions activities, and other initiatives designed to support future growth. Excuse me, guys. And this distinction matters to me personally. The reason that it is the case is because there really is a difference when it comes to whether or not expenses increasing due to the underlying business is actually deteriorating, and expenses increasing because management is intentionally and deliberately investing money in trying to expand the business. Now, obviously, spending money doesn't automatically mean that those investments are a guarantee that this will improve the company. And that's something we're going to have to be watching over the next 2, 3, and 4 quarters. But based on the call, the strategy did seem pretty clear. And it's that they're willing to sacrifice some near-term EBITDA in an attempt to create significantly more growth later. And personally, I'm okay with that for now. And what I eventually need to see, however, is a return on those investments. And if we're talking about these same investments several quarters from now without seeing stronger organic growth, no more contract wins, and no more signs that a mergers and acquisitions is going to be complete, then after 2, 3, or 4 more quarters is when I would start to ask more questions. And there would be more concerns raised, in my opinion. And another thing that continues to stand out to me is Castellum's balance sheet, because as of June 30th, Castellum reported approximately $16.9 million in cash equivalents. And they have zero debt. That's something they've talked about a lot. They talked about it a lot in this call as well. And also they have approximately $19.8 million in working capital and approximately $35.9 million in stockholders' equity. That gives management a decent amount of flexibility, and Glenn emphasized this several times during the call, and they are continuing. What he emphasized numerous times during the call is that they're continuing to build their cash position, they are debt-free, and management believes that this puts Castellum in a strong position to pursue additional growth opportunities. And obviously, all this is tying into what I'm going to be talking about next, which is regarding acquisitions. And this is one of the sections that I paid some of the most close attention to, because on this channel I have talked a lot about how Castellum always is talking about completing an acquisition. And in this call, they did talk a decent amount about their acquisition strategy. And the things that I heard made me think that management is actually still on path, and they're still putting in major effort to actually complete the right acquisition for the company. And there's nothing that indicated to me that they've abandoned that strategy and they completely just threw it away and just threw in the towel. That did not come to my mind at all with the way that they emphasize it in the call. Management talked about continuing to evaluate acquisition opportunities, but they also made it clear that they aren't going to rush into buying something simply so they can announce an acquisition. And one of my takeaways was that they want companies with strong characteristics. That's including positive EBITDA. And also, they want the acquisition to make financial and strategic sense. And they also talked about the quality of management, because they're not looking to buy a company and then immediately gut the company. They want strong operators who can become a part of the broader Castellum organization. And I personally like that approach, because the objective should not be make an acquisition as quickly as possible. What the objective should be, in my opinion, would be make the right acquisition at the right valuation. And management essentially said that they're trying to move quickly, but not recklessly. And there's a major difference between those two things. The presentation actually lists one of the priorities for the remainder of 2026 as advanced discipline, accretive M&A strategy. So since that's one of the priorities, I'm going to be watching extremely closely, and I do want to see Castellum get another acquisition done, because as they have proven before that they can complete acquisitions, but I would much rather, and I mean much rather, see them wait for something that actually improves the company rather than just burn through some cash through their cash position just because investors are impatient and they really want to hear news and they really want to see an acquisition get completed. So there was also an interesting question about capital allocation because surprisingly, I do want to point out that I was extremely excited because at the start of the earnings call, when they mentioned that there was going to actually be a Q&A section at the end of the conference call, at the end of the earnings call, first off, it surprised me because again, it was just their first one for the company history, and two, I actually like to see it, so I just wanted to point that out there. But in the Q&A section, the question that was asked was regarding capital allocation and whether Castellum would consider buying back shares, and the response that management provided, I believe it was David Bell that gave the answer. If I'm mistaken, forgive me, but I'm pretty sure David Bell and then Glenn followed up with it. And the essential argument was people investing in Castellum are largely investing because they expect the company to grow. So right now, management believes that the capital is better used towards organic growth and acquisitions rather than returning that cash through a share repurchase. Now, to be clear, they didn't say that a buyback was not completely off the table, but that's just not the priority right now. And personally, for a company at Castellum stage where they're at right now, I do agree with that approach. And if if they do believe that they can deploy capital into an acquisition or business development opportunity and generate substantially more long-term value from it, I'd rather see them do that than spend the money temporarily supporting the stock price. But again, execution is everything, and they eventually have to prove that they can generate that return. So again, and even like what Glenn said, what matters most is execution. And what separates because this is a tried and true strategy according to Glenn Ives. He did say this, and he said that the difference between companies that fail at this and companies that succeed at this is mainly boils down to one word, and that's execution. So we do got to see that they can generate that return, to be clear. Now, another part that was pretty important in the presentation was that Castellum reported approximately $271.7 million in backlog as of June 30th. And they also reported approximately $935.5 million in their qualified pipeline, almost $1 billion. And they've already won more than $219 million in prime awards from contracts, mainly coming from the 3 prime contract awards that they won within the previous year. So those numbers, they do sound incredibly relative to Castellum's current annual revenue base, but the problem with that is that a backlog, as you do know, isn't revenue. And I have mentioned this so many times in previous videos, and eventually investors, they do need to see that these contract wins actually flow through the income statement. And for the first time, management gave us significantly more detail about how they expect that conversion to occur. And again, this is important. According to the presentation, approximately 16% of that backlog is expected to convert during the next 12 months, and then approximately 48% during the following 24 months. And the remainder extends beyond that. Now, putting it in perspective, 16% of $271.7 million is approximately $43.5 million. Now, again, that doesn't automatically mean that Castellum is guaranteeing that $43.5 million of revenue from the backlog, but government contracting, even though it doesn't work that clearly, it gives us an idea of the runway that management currently sees, and that is an important distinction. But at least they went a little more into detail. So another important question or clarification from the Q&A that someone basically asked, how much control does Castellum actually have over when the backlog converts? And management did acknowledge this, and they said that they said something that I think investors need to understand. And they don't control all of it, because in government contracting, the customer ultimately controls when certain options are exercised and when work is scheduled and when funding is released. And Castellum has visibility into these programs, but they can't simply decide tomorrow. They can't just go ahead and say, let's convert another $20 million of the backlog. That's just not how it works. And management said that they intentionally try to be cautious about what they disclose so that they don't overpromise. And I did like hearing this. And again, anything up to this point or in the rest of the video, if there's any corrections that need to be made, please feel free to comment below. But even though I liked hearing that, there still is a concern that still remains there. It's the fact that regardless of whatever the reason is, investors eventually need to see the backlog translate into materially higher revenue. Because me personally, I'm willing to be patient, especially when we're talking about long-term government programs. But to be clear, I'm definitely going to be tracking this over the next 2, 3, and 4 quarters. So the other numbers that shouldn't get lost here, again, going back to the qualified pipeline, is the increase to approximately $953.5 million, with around $817 million at year end of, comparing it to that the year end of 2025. We're now talking about almost $1 billion of identified opportunities. Again, being clear, pipeline is in the backlog, and backlog is in guaranteed immediate revenue, so we need to keep those things completely separate from each other. But what it does is it tells us that Castellum has a potentially significant amount of business in front of it. And management specifically identified converting pipeline opportunities into awards as one of the company's major priorities for the remainder of 2026. So there are really 3 steps I'm going to be watching. Simple as this. I'm going to be watching the pipeline. I'm going to be watching for more awards. I'm going to be looking at the backlog and seeing how that converts into revenue. Simple as that. So if Castellum can did I say 3 steps? I meant 4 steps. Sorry about that. Anyways, if Castellum can consistently move opportunities through that funnel, that's where the growth story becomes much more interesting. And quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. Now, another part of the call that was interesting to me was regarding the Navy and EMALS, and EMALS is short for Electromagnetic Aircraft Launch Systems. And management talked about the work Castellum is currently performing and the importance of that technology to the Navy's aircraft carrier strategy. And my personal takeaway was that management believes this work can remain relevant for a long period of time. And Glenn discussed the vulnerability and strategic importance of aircraft carriers. The numbers of operational carriers and the fact that the newest Ford class carrier uses EMALS technology. The important thing here isn't necessarily trying to predict and exact a dollar amount. It's the fact that Castellum has positioned itself inside technology tied to major long-duration Navy platforms. And that's exactly the kind of work I want to see a company like Castellum involved with, because these aren't projects that disappear overnight. There was also a question about the approximately $4 million SSI subsidiary contract and AdMax. And this part was interesting because management seemed to view the opportunity as potentially broader than simply the initial contract itself. And my takeaway from the discussion was that if Castellum performs successfully on this modernization effort, there could potentially be opportunities to modernize additional systems. And again, I don't want to get ahead of ourselves and assume follow-on work that hasn't been awarded, but has exactly the type of land and expand opportunity worth monitoring. So basically, it's getting your foot in the door, executing well, proving that the technology is valuable, and then potentially competing for more additional work. And there was another theme throughout the call that I liked. Glenn repeatedly emphasized the actual work that Castellum is doing, specifically regarding cybersecurity, electronic warfare, Navy modernization, AI-enabled capabilities as well. And these aren't simple buzzwords being put into an investor presentation, because management's argument is that their employees are doing mission-critical work every single day. And Glenn, he essentially challenged people to look at what Castellum has accomplished at its size, particularly regarding the 3 major Navy prime contracts that they were awarded. And again, that doesn't automatically mean that the stock is that doesn't automatically mean that Castellum CTM is a good investment. But strategically, I understand what he's trying to say, because for a relatively small government contractor, Castellum has managed to position itself around some very large programs. And the next challenge that they have right now on the table is monetizing that position. Now, after listening to the call, what I'm still concerned about and some of my biggest concerns walking away is mainly three things I would say. Number one would be backlog conversion, because I don't expect $271.7 million to suddenly become revenue overnight. And management literally told us that's not how these contracts work. But I do want to see increasingly meaningful revenue growth as these programs ramp up. The second concern would be regarding profitability. Now, again, I'm okay with increased expenses right now personally because management says they're investing for growth. But eventually we have to see those investments actually produce results. I don't want necessarily something along the lines of we're investing for future what they said about how they're investing for future growth become an excuse that lasts indefinitely. And again, to be clear, I'm not saying Castellum CTM is making any excuses. I don't believe that's the case, but there have been stories in other companies that have said that they're looking for future growth or they're investing in future growth, but that never translated to anything actually meaningful, not manifest, but what's the proper word? Actually show up financially in the numbers through any reports, through revenue, through profitability, and those investments didn't actually turn out to be good investments. That's all I'm trying to get at. And the third thing that I want to be watching and paying attention to would be regarding the mergers and acquisition execution. Because again, the balance sheet is strong, their debt is free, they have almost $17 million in cash, and management continues talking about accretive acquisitions. Eventually, I want to see them execute on that. I'm not asking them to rush the process, but and it doesn't even matter what I ask, whatever the company believes is best is what they're going to do. But if Castellum's long-term strategy is organic growth plus acquisitions, then acquisitions eventually have to become part of the equation again. So, despite those concerns, I actually came away from the call feeling better about the bigger picture. Not because Q2 was spectacular, because as you know, that wasn't the case. But the reason why I actually enjoyed the conference call, the earnings call, was because management provided more context around what it is they're building. First half revenue is growing, as we do see. The balance sheet is debt-free. Cash has increased. Backlog remains enormous relative to the company's current revenue base, and the qualified pipeline is approaching $1 billion. They've already won more than $219 million in prime awards. Management expects 2026 to be a record revenue year, and they're continuing to pursue organic growth. And they're investing in business development, and they're still actively looking at mergers and acquisitions. That's a very different picture from a company whose underlying business is deteriorating. Now, the question isn't whether Castellum has opportunities. They most definitely do. The question is whether management can execute on those opportunities, and that's what the next several quarters are going to tell us. So overall, I'm putting this quarter's and earnings in the category of not perfect, but encouraging, and giving lots of context to the bigger picture. So what do you personally think about Castellum CTM? Let me know in the comment section below. And let me know what it is you want to see in future upcoming videos. And again, I like giving the content that you want to see. And if you did enjoy the content, feel free to hit the like and subscribe button. But with all that being said, guys, InvestQ, David Figueroa out. Stay safe, and I'll see you on the next video.